This laptop, cell phone, tablet, and headphones together cost more than $3,500.
Well, Apple's an amazing company, and the multiple's not gigantic.
Is a $2 trillion milestone. Apple's market cap crossing that incredible level for the first time today.
One of the biggest consumer tech companies in the world today is Apple. Apple's given us so many products with a wide range of uses for our everyday lives. We've got the iPods, the iPhones, the MacBooks, and so much more. And it's all thanks to Apple. Now you're probably wondering if the Apple stock is worth investing in. I mean, it is responsible for a lot of the hottest gadgets we can see in the market. The shares jumped way up high after it released its second quarter earnings. The company rose to a market cap of over $2 trillion. However, a lot of investors are still thinking of whether or not Apple stock should be bought. That's exactly what we're going to be talking about in today's video. So sit back and relax as we dig into and analyze Apple stock. This is Business Explained. To learn more about all things money, get educated about how to do business, become business savvy, and enjoy more videos like these, subscribe to my channel and click on the notification bell, and may you be granted with many, many sweet returns. As always, let's first take a look at the history of Apple. The company was founded back in 1976 on the 1st of April by college dropouts Steve Jobs and Steve Wozniak. They wanted to change the way that people viewed their computers, and they wanted to make them more user-friendly. They started Apple in Steve Jobs' garage, and they sold the CPU on its own. No monitor, no keyboard, no casing. In 1980, Apple went public and sales jumped to a whopping $117 million. Wozniak soon left Apple because he lost interest in running Apple computers, so Jobs hired John Sculley to be Apple's new president. However, controversy ensued and Jobs left the company in 1985. He bought the animation studio Pixar and founded a software company called Next Software. However, Apple's market shares began to dwindle over the next few years, so they bought out Next Software and asked Jobs to step back into the picture. He then made changes to how Apple was run and brought in new products to breathe fresh life into the company. He officially became Apple's CEO in 2000. Since then, many amazing Apple products like the iPod, the Mac, the iPhone, and iTunes have been available on the market and have turned Apple into the tech giant it is today. Steve Jobs passed away on the 5th of October, 2011, but his legacy lives on in Apple. So what is the condition of Apple stock today? Well, it hit an all-time high following its June quarter earnings report. Its market cap reached a whopping $2 trillion, outperforming most other stocks on the market. However, it has also taken quite a dip. It was one of the 6 tech giants whose cumulative losses amounted to $1 trillion. Following a stellar performance in August, Apple stock went down by about $325 billion in 3 days. This is why many investors are wondering if Apple stocks are a buy right now. Apple's success can be credited to the iPhone, which is used by many consumers across the globe. The iPhone was first released in 2007, and it only grew from there. It seems that Apple was able to develop a following for the iPhone, and the tech giant has released a new version of the phone each year, coupled with a whole host of other Apple products and services. The 2020 coronavirus pandemic triggered a stock market crash, but Apple has bounced back from its lows. Currently, it has an IBD relative strength rating of 93, which puts it in the upper 7% of all stocks. This was assessed over 12 months. The stocks with the best growth typically have a rating above 90. As of the 16th of September 2020, Apple stocks are priced at $117.190 apiece, but this still does not make them a buy. According to the IBD trading guidelines, Apple is trading beyond the stipulated numbers. It is trading beyond the 5% chase zone, and it is also trading beyond the 20 to 25% margin for profit taking for its last breakout. According to Investors Business Daily, AAPL stock will need to form a new base in the right market conditions before setting a new potential buy point. As I said a while ago, the iPhone has been the main growth driver for Apple. However, phone sales have slowed as people try to extend the lifespan of their gadgets. So what's the next big thing that could boost Apple's sales the same way that the iPhone used to? Actually, it's two things: Apple services and wearables. The revenue for each rose to $13.16 billion and $6.45 billion respectively, according to their June quarterly earnings report. So what's in store for Apple stock in the future? Well, Apple's stock price is known to grow, so it would be a safe bet to assume that it would continually do so for the foreseeable future. The future price of Apple stock is believed to be around $167.470, roughly a 31.13% increase from its current market price. This is projected to happen about a year from now. To put it into perspective, let's say you invest $1 into Apple stock right now. About a year from now, your $1 would grow to $1.3. It seems small when you look at it with that example, but imagine your returns if you invested $100, $1,000, or even $1 million into Apple stock. Two phenomena are expected to boost Apple stock prices over the next few years. The first is advancements in 5G technology, which would call for iPhones that are compatible with 5G tech. Secondly, analysts expect that more users would flock towards Apple services and wearables following its heightened demand. However, as with all things, there are also risks with relying on Apple stock. Analysts have pinpointed 3 risks in particular. The first is that Apple's market share might sink as more people become unemployed. This would lead consumers to reassess their purchasing decisions, and they may opt out of buying iPhones if it means that they would be able to buy a month's worth of groceries. Next up, Apple is being sued by Spotify in Europe because Spotify claims that Apple has too much of an advantage in the App Store. If Spotify wins the lawsuit, Apple might be faced with other lawsuits from companies like Netflix and Disney that specialize in the production of content. Lastly, because of the impact the pandemic has had on spending habits, Apple might see a decline in the usage of their payment facilities, namely the Apple Card and Apple Pay. Apple's future relies on how well the economy would bounce back following the coronavirus pandemic. Because it specializes in consumer tech, it needs a steady supply of consumers who can actually afford to buy their products. As I've said, spending habits have changed. If you were made to choose to spend your money on food for your family or a brand new iPhone, which one would you choose? Apple's had a great first half year, considering everything that's happened around the world so far. However, could they keep it up during the last few months of the year? We'll just have to wait and see. What are your thoughts on Apple stock? Would you purchase and invest in it now? Why or why not? Let me know what you think in the comment section below. I'll be replying to all of you who comment within the first hour of me posting this video. If you enjoyed this video, you should definitely check out my other video on the upcoming global stock market crash, Part 1. Over the course of history, the stock market has crashed multiple times, and each time wasn't pretty. Investors lose a whole lot of money, and big companies aren't immune from this either. Recently, there have been talks of yet another market crash in the near future, and investors need to brace for its impact. What are the factors that lead to the stock market crashing? When is the next big crash predicted to happen? Well, that's exactly what we're going to be talking about on the upcoming global stock market crash, Part 1. Stay tuned and stay educated.